Hello, I'm coming to you one last time from PDAC. Yeah, it's basically Daniel from the past. And today we're going to talk about uranium stocks. Two of my favorite uranium stocks that I saw here at PDAC. And then we're going to talk strategy because this is really important, especially times like this, what we have seen in the past days, the crazy volatility in the commodity market with the commodity stocks. That shows us we need to have a clear strategy what to do. And that's what we're going to talk about today. That's way more important than the question of, ooh, there's one more hot silver stock. Let's get right into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and months. Hi, my name is Daniel Wilhelmi. Welcome to the channel. If you're new, welcome. I'm coming here from PDAC conference. Yeah, and it's Daniel from the past. As you can see, I'm here. This is Tuesday, and well, I hope I haven't died. And today's Daniel is alive, but he's traveling, so that's why I recorded this video 2 days early, but it doesn't really matter because what we're really going to talk about is absolutely timeless. And I'll take you through PDAC so you get an idea of what's going on over here. We're going to talk about strategy because strategy, investing strategy is way more important and will give you way more positive effects on your investing than one more hot silver stock or uranium stock. And while we talk about uranium stock, look at this transition, huh? I mean, come on, if you haven't subscribed yet, hit the subscribe button just because of that transition. But also because you're going to get good information that you don't necessarily get anywhere else. So I told you I'm going to give you a feedback on PDAC, what I see here, what companies I talked to. By the way, we are here at CoreCheck right now. CoreCheck is a specific part of PDAC where the companies, you can see it here in the background, show their results of their drilling. So you can really take a look at the stones, at the different ore that they brought up to the table, and can take a look and decide, hey, what does this, as you can see here in the background, look at me creating production value for you guys. What does it really look like? So I saw and talked probably close to 20 companies so far. Saw presentations, talked to management, so on. Not much here that I really like so far. And that's okay. That might sound wild to you, and you might say, wow, that is what a waste. No, not really, because if that saves us from taking unnecessary losses, then we're quite successful. Basically, if I have events like this and I come out with 2 good investment ideas, I'm happy. That's really what you have to look at. If you come to a conference like this and you walk away with like, I found 10 companies that I want to buy, then your analysis is not good enough. It's not tight enough because there is definitely nobody is looking. I don't think this ore is gold. I don't think that would be worth of me squeezing that into my pockets. Let's say it like that. You really need to be critical, especially with mining companies. So if you come out of an event like this with 10 investment ideas, too many. Tell me 2 or 3 after talking to 30, that's about a 10% success rate. That's already really high. So, but I saw 2 that I want to talk to you about from the uranium sector. So I just got out a presentation of Denison Mines. If you followed this channel, you know Denison Mines. It was one of my first uranium stocks that I recommend. It's one of my favorites in the developer space for uranium. And again, if you haven't subscribed to the channel, hit the subscribe button so you do not miss videos like the one where I talked about Denison Mines. I don't know, it was like, since then it went up like 150% or so. That was an outstanding presentation by Denison Mines. And I have to say, I can reiterate my analysis from the prior videos. Denison Mine is my favorite developer. I mean, there's always risk involved in mining, obviously, but if they execute and they have a tip-top management on what they're planning to do, we're gonna have a lot of fun times with Denison Mines, and that stock could go much, much higher. And again, it's a developer, it's advanced. This could be the next big uranium stock. Now the management, they prefer execution. They're not as rah-rah. They're not into investor relations as aggressively as, for example, USC is. USC. Fuck them. UEC, I hate the Trojans. If you're into college football and college basketball, you know. So UEC, really aggressive on the investor relations side. Denison Mines doesn't do anything like that. And that's okay. The management prefers execution, they prefer quality. This is a stock that's not going to move dramatically and wild and have crazy swings. But I think this is a stock where we're going to have the possibilities of absolutely great returns in the uranium bull market over the next years. And again, I believe this is going to be the next big blue chip. Then among the advanced explorers or the senior explorers, depends how you want to call it in the uranium sector, IsoEnergy, they do projects in the US and Canada and Australia. Really good presentation. They have been on my radar quite a bit. But again, nothing is perfect, and that's what I meant when I said earlier, you need to know what are you getting yourself into. There are going to be dilution risks involved with IsoEnergy. It looks like they're going to be in production in the US pretty soon, but it's really a three-country story. Now, all Western countries are like that. That's great, and they have good assets in the US. They have a monster asset in Virginia, but there's some political risk with that. We'll need to wait and see about this. And there's major dilution risk with IsoEnergy. So that is a company, if you are willing to take on the risk and you're willing to take on a uranium explorer, you can maybe put that on your watch list. Again, I'm not your financial advisor. I can't answer that question for you if this is something that you should do. You need to figure that one out yourself. But the key here really is, in order to protect yourself from the dilution, you need to buy that one as cheap as you can possibly get. So that's the one where you put it on the list, and if we have like a severe market correction, that is when the stock like this might become interesting. And that leads us to strategy today. And remember, it's based on Andrew from Texas, who was kind enough to come up to me on Monday, and we talked a little bit, and he decided after he saw one of my videos, hey, I like this stock, and we're not talking about which one it is, doesn't really matter, and I'm gonna get in on it. That's his own decision. Again, I'm just presenting to you what I like. I'm a shareholder of that stock myself, so it was his own decision, smart decision, because he made a lot of money so far. And he instinctively did something that is brilliant, and that's how to do it. And this is called doubling down on the winners. And it's something that retail investors get wrong all the time. It's absolutely terrible how a lot of retail investors mess this up. So what retail usually does is they double down on their losers. But what you should really do is double down on your winners. So meaning, if you have a stock of a company and that company is performing well, or in the commodity sector, the underlying commodity is going up, it's performing well, then what you want to do is you want to add to that position in weakness. instead of doubling down on a stock that's, by the way, metals that matter, commodities, that's where the easy money is going to be made. Instead of doubling down on loser stocks. So I here show you the chart of LVMH. Now, that's not a commodity company, that's the luxury goods company from France. As you know, if you subscribe to my newsletter, we've talked about LVMH in correlation to short investments. And again, you can find the link to sign up for the free newsletter. It doesn't cost you a penny in the comments, or you go to bullmarketlifestyle.com to sign up. So you look at this stock, this is clearly a broken company. They have a lot of problems because they depend heavily on sales in Asia, specifically in China, and the Chinese consumer, well, the Chinese consumer is in trouble, we know that. So, as you can see, the stock is down over 40% from the top. Now, this is a great company, but this business model in this economic climate has a lot of problems, and the stock reflects it. This is, I'm not going to say broken, because that's not true, but it's going through a really difficult time, and it'll take some time until they get out of it. So this is not the type of stock. If a stock is down over 40%, a big company like LVMH, that shows you the company has serious problems. This is not like a 20% normal correction anymore. This is something bigger. So this is not the type of stock you want to buy in weakness, maybe at some point, but not now. What you instead want to do is you want to figure out, hey, what are the good companies that I own, where the stories are intact, where the growth is there, and you see it in the share price, because guess what? These shares, the share prices of these stocks, they go up in value, and these are the type of stocks that you then want to add on when you see a weakness. And that's exactly what Andrew has done, and it is so smart. That's the way you do it. Because you know what's going to happen? You're going to end up with a portfolio full of winners, because that's all you have left in your portfolio. Well, the average retail investor is going to end up with a portfolio full of losers, where they double down on broken companies, right? And you see this a lot in the commodity sector with explorer companies, where they're going to have bad drill results, they're going to have some political problems, they're going to have some social problems with some of their projects, and the stock goes down 30%, 40%. And the retail investors go and say, well, I'm going to keep buying because the stock is down now from what I bought it, so it's much cheaper. What a great investment idea. No, it has serious problems. The investment thesis has changed. The company has a lot of issues now. You do not want to add to this position. You want to add to a position where things are going well. And that's exactly what Andrew did. That is the right way to do it. It is a very unusual way for retail to do this. He is way ahead on the curve of this. So what I'm trying to say is, be like Andrew, right? Look at your portfolio, look what you like. For example, I like uranium. I'm gonna add to my uranium positions in weakness, because I know the long-term thesis is intact. I know the companies that I want to invest in that are delivering on their corporate development and their project development. So I want to own more of these shares. I don't want to own shares of exploration companies that didn't work out, and that always happens, right? So it is a very, very different concept, and it's very hard for people to add to stocks after they have gone up by 50%, 60%, sometimes 100%. But really, that is the strategy to build a portfolio full of winners. Goes for really every sector in the market, but especially in the commodity sector, where things can change really on a dime, especially with smaller exploration companies. You have to be willing to take the loss. You have to understand that if you do exploration companies, even senior explorers, if you do development companies, things go wrong in the mining sector all the time. That is okay. That's not a problem. The problem is what do you do afterwards, right? And I call it ETL, and we're going to talk about ETL in one of the coming strategy videos. ETL stands for eat the loss, right? But also, on the winning side, add to the winners. That is what you do. Look at the companies that you like, and then add to the winning positions that you have if you like the companies. That is it for today. Oh, by the way, Andrew, if our stock keeps going up like it has in the past, next time we see us, you owe me a coffee, and it better be made from Brazilian coffee beans. Talk to you later. Daniel from the future will speak to you tomorrow. Bye-bye.